All right, welcome back to the weekly Gold Rush weekly watch list. Happy Monday to everyone out there listening live or on YouTube. Happy Memorial Day to anybody who's served or anyone who has a family member in the service or anyone out there who wants to, who just feels connected, right? Shout out to you. Thank you for your service. All right, so real quick, let's just take care of some business. So our small account challenge starts next Monday, June the 5th, and it goes all month until June 30th, which should give us about 20 trading days worth of opportunity, right? So I'm very, very excited about that. We have some prizes. We have a $100 gift card from Amazon. We have a complimentary month of 24K for the winner. And those are just obviously those are very, very small prizes compared to the prize of you not only building your account, but changing the way that some of your discipline is set up, right? So the big prize is you getting to the other side of it. So I'm very, very excited for that. And if you want any details on that, you can find it within our, right now it's in our headquarters channel. If you're in the server, if not, you can visit my Twitter at huey.info. And it'll also be, information will also be posted in the description of this video. And if you have any questions, just holler at me. All right. This week, not a major week for earnings. Not too much going on, although I'll say that there's going to be a lot of interest in a couple of names for sure. So I'm just looking through the calendar, and I see Hewlett Packard, HP, Box, all reporting on Tuesday after hours. Wednesday we have Advanced Auto Parts, which, as you guys know, I always say some of these smaller, lesser traded companies are a good barometer of how the economy is doing. So I think Advanced Auto Parts would be one of those names to pay attention to. And then after close we have, and this is the big one, we have CrowdStrike, we have Salesforce, which is going to be a big one. We have AI, which is going to be a very big one, right? C3 AI is probably it's projected to, NVIDIA came out a week before their earnings on CNBC, and they basically announced that they made an announcement that made people very bullish. C3 AI did the same exact thing last week. Not a lot of people spoke about it. So big expectation there. So that's going to be one to watch. Okta is going to be another one to watch because they're in the tech services. And then on Friday, we have Macy's, we have Bilibili, we have Zscaler after hours, we have Broadcom, we just announced a partnership with Apple. So I don't know how far back the partnership goes. I don't know how far back the relationship goes. So I'm not sure what to expect with the Apple partnership with Broadcom earnings just yet, right? So I have to dig into it, but we have until Thursday. We have Lululemon. We have ChargePoint as well. So a lot of interesting names reporting this week. Five Below also on Thursday. Another economic barometer name to be interested in. Now they did come to agreement with the debt ceiling. Debt ceiling has been resolved. The money is getting allocated to wherever it's going. It doesn't really matter where it's going. What matters is that the market reacted in a positive way. If you look at ES futures, they gapped up just slightly. What that means is the price went up above where the SPX closed, right? It went just up above. It pulled back a little bit. I'll show, and we'll take a look at it after market close. But so if that behavior continues, then there's going to be a continuation move, hopefully to the upside, to maybe fill this gap right here into 42.29, and then work within the range of this candlestick here. I have, and just to recap, I have a few names that I kind of want to go over from last week. And then if any of them are going to be very, very interesting and need more time, then I'll give them more time. But I'm really, a lot of this is going to be focused on what the names that we looked at last week, what they did and what they're going to continue to do, right? What I'm looking for this week with a lot of those names is a continuation. I don't expect anything less from some of these names. So first one's SPX. Again, we have this kind of very interesting level of support and resistance. If you look all the way across to the left of your screen, you see that it's bounced here a bunch of times in the past as support and as resistance. Right now, it's currently acting as resistance. A little bit of sell pressure here on the end of this candlestick, but I think that based on where futures is now, we might continue to move to the upside and fill this gap into the bottom of this candlestick here. Now, as you can see, now I wouldn't call it. I'm not gonna be so fast to call it a bull market, and I'm not also not gonna be very quick to label it as a bear market rally. Right? Forget about what market we're in. Right now, what I'm seeing is higher lows with flat highs, right? Some of these highs have gotten higher, some of them have gotten lower. I want to see all this price above this pivot point right here. This is going to be a crucial pivot point, because I believe this is one of the most recent high points from the 2022 bear market, right? And that was straight up a bear market. Now, if we can take over this pivot, we'll get back into where the demand is over here. You see there's a bunch of demand sitting right in this area where price just gapped all the way up. So I'm looking for us to work our way back into this level at 43.20. And, you know, it might take a week, it might take 2 weeks, it might take 3 weeks, however long it takes. There's going to be a crucial area, 43.20 to watch. So that's what I'll be watching for SPX. However, if we do fail this level, I want to see us fall back to the 786% Fibonacci level and have the 20 daily moving average to catch us as support. So a failure here, I just would retest the low of the as a support. QQQ has been on an absolute tear. It's pretty much going parabolic at this point. As you know, we've been playing very tech heavy names these past couple of weeks. Anyone who's, Nvidia is a high weighting, Apple, Microsoft, those are all very strongly weighted in SPX and QQQ, especially QQQ. So, this is just a reflection of how those names have been doing. Now, QQQ is going to be a crucial name in our small account challenge. Why? Because the premiums are very well priced. Because the volatility isn't killer the way that SPX volatility is. And if you catch a day such as Friday, where you get a nice candlestick with a low of 340 and a high of 349, so a $9 move or $8 and change move on this candlestick will really make you a lot of money, right? So this is going to be a main name of focus for us during the small account challenge. And right now we're sitting at an area where there was a little bit of indecision and then price fell very, very hard. So I want QQQ, it's cleared it a little bit, but I want to see it really trading above this level into the 350s, right? I want to see QQQ into the 350s, trading within the range of this candlestick here, which is low of 348.69, high of 356. I want to see it within that range before we can either pull back and retest this as support or break out and retest the 360 level that we tested here on these, some of these levels here. I just want to see a continuation. Same setup as SPX. We got the higher lows setting up. This one does have higher highs as well. So, it's in a local uptrend. I'm still not going to call it a bull market or anything like that. I just like the local uptrend from our low here starting at October 2022, just forming higher lows and higher highs. So that's where we're at with QQQ. Next one is XLE. XLE continues to sit at this support level. It bounced last week off the support and then got pushed back down by the 20-day moving average. And so we're just sitting right at that level again. What I did was I obviously connected, my point A and my point B here to kind of capture all of this bounce area down here. So I want to see it continue to bounce. And if it doesn't bounce, then we're going to look for a breakdown for energy. And typically whenever tech goes up, energy goes down. So if you ever see me calls on energy names such as CVX, XOM, Oxy, then you know that must mean that there's either indecision in the market for tech or there's red day in the market for tech. So one or the other. But if it does break down, tech continues to rally as I expect, then I think that these are going to be some of the levels that you'll notice for XLE. And with XLE, you want to put some time on it. The contracts are so cheap that you can buy a couple of weeks out and not even go above $1 premium. So I would look at XLE for puts for the next couple of weeks, depending on how tech moves, depending on AI earnings, depending on Salesforce, CRM, all that stuff. Okta, Zscaler, depending on how they kind of report. But again, a breakdown below pretty much the low of day. It tested the support twice, once on Thursday, once on Friday. Below that support with the 20 pushing it down, we can come all the way down to the 75 level. So I'll be watching it very closely. Next one is XLF, financials. Financials doing kind of the same thing. Obviously the spotlight's off of financials for now. There was some really, really bad news coming out of Wells Fargo where they got taken out of this a trust service that all these banks kind of engage themselves in. And the reason why, I'm not sure, but they basically lost the trust of the trust service. So there might be something brewing in this industry for more downside. And when I mean more downside, I mean like days like these, right? Especially with Wells Fargo being, I think, the fourth largest bank in the world. So that's something that's very interesting, and we'll continue to watch into the next couple of weeks. But I do like this setup. You know, we do have kind of a very, very strong level here at $36. You know, price traded above it for a little bit, but couldn't really make a move upward. It just kind of consolidated right above it, fell underneath, tested it, and then fell hard. So I want to see a continuation move to the downside to maybe retest the low here at 29.59. So we'll see what happens with XLF. Right, so that's the sectors and that's the market overall. Now we'll get into the names. First one is Apple. Now, all of these names, I'm just going to hit the weekly on some of these because these are all names that we discussed on last week's weekly watch list. And I'll just show you real quick. You know, all of these names here, from Apple all the way to Twilio, are the green flag is all on the watch list as of last week. So I just want you guys to pay attention on where we are and how we've moved since last week. And now this is why I continue to play the same names, because look at this. You know, this is like 12 back-to-back weeks of Apple just up, right? Let me fill these in so you can see a little bit more clearly, right? It's just up, right? So, you know, so that's why I've been keeping these same names. I see the momentum there. I see the strength. I see the consolidation with the nice move coming out of it. And that's what I want. I want a continuation on Apple. Now, Apple looks like it formed an inside week. Let me just look at the lows of these two candlesticks. Yeah, we formed an inside week last week, which I love because it provides us with clear targets. So we have the highs here. And the lows, I mean, the low's so close, it's like 10 cents off, right? But it's pretty much a double tap on the bottom of that support there. Tested the 20-day moving average and bounced, right? Price opened up here, came down, tested the 20 and then bounced. And so now we have a breakout. Let me go to the daily. A breakout above the high of last week can give us, and guys, we're very, very close to all-time high. I mean, if you look at where we are now, all-time high is sitting at $182 and I think it's 182.88, right? Or rather, I think it's this one. 182.94 is all-time high. So we're very, very close to all-time high. I like the consolidation on the daily chart of Apple here for the past couple of weeks. This is a weekly weekly supply zone. What I basically did was, and I don't know why it's not showing up on this chart. It's probably on the chart at my at the computer at my job here. So this is a demand. This is a supply zone, which means every time price comes up to this area, rejects. You see some indecision between these 2 weeks, and then a massive move down. It pulled back to retest the supply zone, and then all sell pressure, massive move down. So for the past couple of weeks, we've just been watching Apple. I try not to play it because we're still in a very, very strong demand zone. Some of these lower levels, right, like the 172, 173, 174, 175 price orders have been filled, so less supply there. But as we touch some of these higher levels, 177, 178, some of those orders that were placed way back here that caused this massive move down, some of them are just sitting there waiting to get filled. We got to clear this demand zone. I mean, I'm not going to say, you know, if this thing is headed to 180, we're going to play 180 calls, but at the same time, we just got to be very cognizant of where we are, right? So just make sure that you know that we are trading within a very, very strong supply zone on Apple. Now, we do have a nice consolidation, nice move up, nice move down, recapitulated, regained, remounted this 20-day moving average, bounced off of this day, and gapped on Friday. So I want to see a continuation. I want to see it break above last week's high and go above the previous high the previous week for a continuation. Otherwise, I want to see it retest that 20. And if it breaks below the 20, I want to see it come back to that 170.52 level and then bounce from there. That's what I'm looking for with Apple. AMD, let's look at the weekly. I mean, AMD, you guys know the vibes for AMD. I mean, what more is there to say? This is last week's candlestick. Or 2 weeks ago candlestick, we were looking at resistance here at $109.57, and this thing just absolutely broke through It broke above all this resistance as well. So I kind of want to see it hold this area. This is going to be a crucial area for AMD to, and there's going to be some pullback. There's always going to be some pullback just to kind of retest where we are and make sure the sentiment remains bullish for now, right? So you see all the sell pressure that was sitting in this shaded area. We want to see AMD come back and pull back into this area and buyers to step in and bring it back up. So that's what I'll be watching for AMD on a weekly. We do have this nice gap down here that was caused by NVIDIA earnings and NVIDIA guidance, more importantly. So same thing, we want to see it just hold within this level, stay above 120. If we can hold 120, then we can work our way up to 130. If you want to play something on Monday for AMD, just take it above or below the range. If you want to take it below, and again, I don't recommend shorting this too crazy. Like if you do, just make sure that you are quick to take your profits, because greed will not work. Greed will not work in your favor if you are bearish on this. This thing is in a very, very strong uptrend. There's no reason really to go to downside unless you want to just trade the pullback, right? So here's some upside targets and downside targets for you for AMD. Next one is Amazon. Amazon has, I think it's cleared this pivot here on the weekly. It's kind of cleared the pivot. I mean, it has a little bit more to do. It has to refill that wick on the weekly chart before it can work its way into these next couple of targets. And then I'm looking after that. I'm looking for 127.92. So let's look at the daily real quick. Good consolidation occurred last week. Monday, Tuesday, Wednesday, Thursday, Friday, right? Good consolidation, held support on all week, and then Friday made a nice move into the previous resistance level. So we're just looking to take out these pivots. There's a nice little gap above 124.71 into that 127.92 area. So I think that if we can break into this level, consolidate, and then continue to move, that would be very, very nice for Amazon. I don't see Amazon pulling back into the 20 anytime soon. I think it has good strength. It likes to consolidate, make a move, consolidate, make a move, consolidate, make a move. So I want to see some consolidation before the next move on Amazon. Next one is Coinbase weekly. I was looking for, I think I had just set it up to just get out of this box that it's in. This is how ugly price is in that I got to stretch my screen out. It's been trading within this channel right here. It's pretty much at the bottom of the channel with a bunch of sell pressure. I don't know whether it's going to hold or not. And just draw my line there. And I can draw another line. I'll just draw it from here. Prices peaked above the channel, came back down. Same thing on this day, peaked above, sellers brought it back down. Now it's down here. Bunch of sell pressure, still a green candle, right? My white is green. Below the 20-day. So if it's bullish, I want to break above the 20-day and then work above the 200-day and then work, really we got to break out above all these moving averages here before we can get bullish. So I'm going to go ahead and set my level on this to 61.90. It can do whatever it wants. I mean, if you like to scalp, then you can just trade this up and down within this channel. And I want to see a breakdown below. And obviously, it's more likely to break down. I want to see a breakdown below 55. What is this? 55.96. So 56-ish breakdown. We got a nice little gap to fill here to the downside. So that'll be a nice risk reward play for you to the downside on Coinbase. But if you look at the weekly, Coinbase pretty much it formed the doji. It gave us a nice move up and then a nice move down, right? During the last week. Next one is Datadog. Datadog did break the previous week's high. All this based off of a nice earnings report. You see the consolidation on these past 8 weeks or so. Then it broke out this week, continued, and now it's kind of slowing down. You see a bunch of sellers sitting in this area. And then you can, if you look over to the left, you can see there's a bunch of sell pressure. Just look at the wicks, right? The wicks show the pressure. Look at all this sell pressure here. Obviously, big red candle, sell pressure. So same thing as Apple of a couple of weeks ago. You want to see it trade within this area. You want to see it take out some of these orders before it can continue to move up. So I'll be watching Datadog. I want it above. If you just look over to the left, there's just the top of the wick. Alert. I want it above this wick here. Then you can start playing the 100, 105, 110, 120 calls for Datadog on a weekly. Looking at the daily, it pretty much went sideways all week. I was looking for it to continue this breakout move here, right? It had this nice move and then inside bar, and I wanted to see it continue the move to the upside. But right now it's just chopping around the supply zone. So nothing on Datadog for now. If we do break down, if you do like it for a downside setup, I would say let's go ahead and take it below this level. There's a bunch of buyers sitting in this area here, so I would just be careful with that. Not in love with the risk reward on it. Maybe this is the better entry, the 91.26, and you can just target the lows, all these lows, right? All the way into maybe the 200 day for Datadog. But I think Datadog is going to be fine, and especially looking at what's going to happen with Zscaler and CRM, because they're all within kind of the same industry. They're tech services. So let's see what happens. You know, don't force it. Just let it break, let it retest, and then take your entry. Next one is, let's go back to the weekly. Next one is Datadog, LRCX. What can I say? I mean, this thing is an absolute monster. You know, it's paid us very, very nicely for weeks now, right? For weeks, and you got to catch it on weeks where it makes moves like this, not these like choppy weeks. It's very hard to trade LRCX when it chops around like this. But I knew that this was going to be a very crucial spot, especially with, you know, all the buyers stepping in here. All the buyers stepping in here made a new high, couldn't take out this high. All the buyers stepping in here after a red candle didn't really break out above this high or this high, couldn't take out this level. You knew that once it broke above that 530 level, that it was going to move. So LRCX is going to continue to stay on our chart. I mean, it gave us a nice run 2 weeks ago, all week long. It pulled back, and then it gave us a nice entry towards the end of the week, right, where it made a move from the low of 559 all the way to a high of 599, right? So again, 600 is going to be a key level for this, or 628 rather. It's already at 628. 633. Yeah, so I think it looks like it wants to pull back to retest that 600 level. This level here, where it found a bunch of resistance, it tested it as support. It might want to do one of these things and pull right back into that 600 level to retest it. That'll give us a good strength into a continuation move for LRCX. LRCX, listen, if it shows a nice setup on Monday and I put out like a $2 play, it's like 20 points out the money, just buy it. If you're profitable, you know, LRCX obviously is not small account challenge, but buy it and hold on for dear life, because you see what it does. LRCX is the type of contracts and type of plays that change lives. So not only because of earnings, just regularly, right? So loving LRCX for a continuation move to the upside, especially after bounce, pullback, bounce, consolidation, bounce. I want to see consolidation and bounce, and I want to see a retest some of these levels here at $700. Right, and we're at 628, so that's a nice 70-point move between now and then. Might be a couple weeks out. Maybe you like something for June expiration. Maybe you like something like the 700 call for June, right? Maybe, we'll see. Next one is Meta. Meta is the same play. I mean, it just has all this strength. Pull back to the 20 on the weekly. Pull back to the 20 on the weekly. Continuation. Pull back to the 20. Continuation. Pull back. Continuation. It's a very clear trend, so you know there's no reason to go against it. You see what it did last week. We looked at it last week and you saw what it did. I mean, you know what I'm looking for, and I don't know where my levels are, but because I drew them out last week and it kind of sucks that they're gone, but I want to see it go back to undo all of this earnings gap. If we look on the daily, you'll see the gap. I want to see it fill this gap all the way up, right? I expect it to hit that $300 mark and then pull back pretty hard. And maybe at that point, some of these moving averages will flatten out. But right now, there's a bunch of strength on it. You know, there's no reason to not continue to play to the upside. Right now, it's experiencing earnings drift, which means there's a positive reaction to earnings. Nice beat on both ends. Good guidance, especially after some really bad quarters, right? Really good guidance. Gap up, continuation move, right? It's called earnings drift. So I'm looking for 275 this week, and then 300 maybe at some point in June. Only thing is with June options expiration, which is the third week in June, is usually one of the worst in the whole year for tech, especially, right? The September one we know is just bad overall, but June is especially bad for tech. Seasonality isn't very good for tech. So what I want to do is ride this wave of tech until the wave is done. Once it's done, we rotate into something else. I think financials, or I think industrials is next. So we'll see. But I do like the continuation move to the upside. I think 270 is going to be a hard target. Above 270, you know, chop around a little bit, hit that 280, chop around a little bit, and then maybe hit the 290 for Meta. But in love with it. Next one is Marvell. I mean, you know, same thing. We discussed it last week on the call. We were looking for it to break above. It just sucks that I don't have any of my targets, but we were looking for it to break above. I think I had this level here because I had some resistance, some support here, some resistance here, resistance here. So break above that level. Massive candle. I mean, there's no way to predict that this is going to happen unless you are very tuned into the industry. Nvidia would have been a nice indicator for Marvell. I think everybody was still high off of Nvidia that we just forgot about Marvell, but we've been playing this for weeks and weeks and weeks. And you know, all these days we got a nice move on a couple weeks ago, broke the 200, pulled back a little bit, and then a nice reaction off of earnings here to give us a nice gap up candle. So you know, what I want to do with this is I would play it. This is a big candle, especially big for Marvell. Usually this company doesn't form large candlesticks with large range like this. It's a 7 or almost an $8 candlestick, which is huge for Marvell, being a $60 company. So I would probably expect this to chop around within this level. It's either going to rip to the upside or it's going to chop around within this level and try to find some new support within this level. So I would just bear to watch it there. I'm also going to just set my alert to, and I think that will probably be above it at market open, depending on what things happen, you know, with tech at the open. But you know, we want to see what it does based off of the top of that level. And if it falls into this range, then this is a pretty big range, so it can really chop around in here for a couple of weeks before it does anything. But let's continue to watch it. And again, Marvell was just absolutely amazing, right? Next one is Microsoft. Same play, continuation move, right? We had that kind of consolidation, bounce, consolidation, bounce, consolidation, bounce, right? This is the previous week's candle. This is last week's candle. And so now Microsoft is also very, very close to its all-time highs. So what that means is if you are in shares or in long-term options, I would consider starting to sell some of them or just like set your stops or whatever the case is, because once it gets into this level at 338, I expect a bunch of sell pressure to jump into play with Microsoft. Now looking at Microsoft here, there seems to be a little bit of a supply zone here. There, right? You got a little bit of indecision between these 3 weeks, three weeks in this area, and then price rejects hard and pulls down really hard, right? So you can see there was a little bit of indecision here on some supply that was sitting back here, and so thankfully buyers stepped in and brought it up. So I expect the same reaction up here where it's going to slow down, form a doji such as this one. And then from there it can really fall or climb or doji for a couple of weeks. So there's no way of telling, but I like the continuation move. Next target for is 338. Go to daily real quick. And then, you know, if you want to short it, I mean, again, you're shorting into strength, but if you want to short it, you know, just play the, I would play these lows here. Keep it simple. This will be absolute. Probably this 315.26 will probably be the last one because the 20 day is going to be right there to catch the price as support. There is a nice little gap down here, so I mean, if you do get the short play, by all means, play this little gap. But the risk reward is skewed to the upside on this until it gets here, right around 338. It'll be skewed back to the downside. So we'll see. We'll be watching it. But you know what my thoughts are on it. I think there's a continuation to the upside for this, especially with, it feels like they're dropping news weekly at this point related to AI. So, and I would expect that C3 AI, which reports Wednesday afternoon, was going to be a catalyst for a lot of these names. So go ahead and keep that on your watch list as well. Next one is MU. Again, continuation. You know, MU was a little bit slower than, and MU is they make semiconductors, and they were lagging a little bit. I mean, you know, a lot of these names were showing strength before MU decided to show strength, but MU finally woke up, and I think somebody announced a partnership with them. I'm not sure if that's the case or not. I gotta go back and like look at everyone else's earnings and see if they made an announcement. But MU is another one that we've been playing. I did not want this. Another one that we've been playing for quite some time, riding this uptrend, right? Very clear uptrend. You know, forming higher lows, forming higher highs. You can see just prices just overall working its way up. It moved on a gap based off of NVIDIA earnings and then the strength of tech on Friday. So I want to see it continue to trade within this level between 75.41 and 72.14. Pretty much the range of this week worth of price in order to base a little bit, regather its strength, and then try to make some new highs, maybe test the $80 level for MU. And if not, I mean, you know, who knows? I mean, they have earnings on the 30th, is that? Let me see. They have earnings on the 29th after hours. So how did I just get that menu? Here, this is what I want. They have earnings on the 29th after hours. So there might be a potential for an earnings run up there. So we'll just re-examine it. Hopefully it bases and gives us a more favorable price. But I want to see a continuation move. I mean, it had a channel, an uptrending channel with a breakout move. Now we're sitting within the range of this kind of, you know, there's kind of a broadening formation here. So we're like towards the top of that range of this very small little broadening formation. This is what I wanted. So above this area, 75.23, I want to see it retest. You know, the range of this candlestick is really what the ultimate target is, which is a low of 78.60 to a high of 86.24. So just get back into the 80s, right? Get me back into the 80s. Not a great risk reward to either side because of the strength of that candle. But, you know, if you wanted to like take a long play on this and you wanted to give yourself a good risk reward level, then you can just get my long. Is this a long? Yeah. You enter at the high and you set your stop to the close. And then you set your target, you know, for this one, I'll probably set it to like 78 or something, because that's a nice round number. And you got a 5-to-1 risk reward ratio. You know, if you wanted to find a good risk reward setup, right? If you look at the 30-minute, that's what it looks like. It looks like where previous resistance was, where current resistance is, that's your entry. Where support is, that's your stop, and then your target is just 78 and change, right? Whatever the case is. There's nothing crazy. I mean, it can do it in 4 candlesticks or even 1 candlestick. So, and then once you enter and price blows through your entry and continues, then you take your stop, you set it at your entry, and now you have a very high risk reward ratio, right? 25,000 to 1. So very, very nice. But I like MU for continuation to the upside. Let's see. Next one is Netflix. Netflix went insane. If you were on last week's call, then you recall that. I was like, you know what? I don't really know the levels on this, but I would defer to Jake. But I know that there's 100% a move in Netflix this week. And if you were trading with us on Friday, then you know that everybody made money on Netflix on Friday, right? I hope the whole market did, because we for sure did. Gold Rush 100% capitalized on it. So Netflix is at a key level right now. You see a bunch of previous support, previous resistance. Strong move to the downside, and then we've been slowly climbing up on the weekly chart, right? Slowly climbing up and forming higher lows. We came back and retested that level, fell down hard, formed a new higher low, came back higher low off the moving averages, and now we're back at that level. So we want to see Netflix break out above that level, break out above that 380 level. Now it did touch above it and it got pushed back below. So you want to see it break that 380 level, and then the next targets are going to be 390 and 400. I believe there's a gap. Oh, this gap has been filled already. I think there's another gap. There's another gap way up here. So that's going to be the ultimate target for Netflix. You know, and I mean, if you've been trading Netflix, or if you've owned Netflix for a while, owned shares of Netflix, then you've been waiting for this gap for a very long time. So that's the ultimate target. I mean, give us like another couple of months and we'll be in there if the strength continues, if they continue to innovate. I believe they're venturing into gaming. So I think that's going to be a good segment for them. So if you like Netflix and you like trading Netflix, then keep them on your watch list. I want to see a continuation move to the upside. If we do pull back on a red day, then this is your downside level, and take it from where price is at now, which is at 378.99. And then play these levels to the downside. Otherwise, break to the upside, play the fives, right? 380, 385, 390, 395, 400. So I think Jake said something about 400 in Netflix future, like very, very quickly, like even in a couple of weeks or even in a week or something like that, but talk to him. I'm not in the business of selling delusion. So that's what I see for Netflix. Next one is Nvidia. Nvidia, obviously, we all know what happened with Nvidia, but if you're on YouTube and you're not in the community, or if you just exited your rock this morning, Nvidia gapped up on very strong guidance in the AI sector, which they doubled down on back when nobody was making money on it. They put all their eggs in the basket and they made a nice profitable move. Absolute beat on all ends. Very, very strong guidance, right? 10% surprise on revenue, 10%, 18% surprise on earnings. So very, very strong beat. And the CEO said that, there's demand in all parts of the world. Every corner of the world has a very, very strong demand. He's like, it's incredible. So I think there's going to be a very strong continuation for Nvidia based on that move. On the technical aspect, inside day on Friday after Thursday's gap up and indecisive doji, I think that if we do not fall into the lows, I think we're going to rip strong into that. I think 450 is the ultimate target for Nvidia. Right. I'm going to go ahead and draw a fib on this gap up. Yeah, I mean, 454 is a 1618 fib, so there's a little bit of confluence there. 450, I think, is ultimate target if it continues to move to the upside. I'm going to go ahead and leave that fib there. What I did was I took the high of the Thursday candlestick and the low of the Wednesday candlestick, point A to B, and then it projects out future 1618 Fibonacci level at 454, and then you can, if it does break to the downside, you can play all these levels as your take profit levels or your support levels for Nvidia, right? But Nvidia, again, weekly watch list, one of the favorites, and it gave us the move. Obviously, the move was perpetuated by earnings, which is totally out of our control, totally out of our realm of locus of control. So I won't take credit for Nvidia moving 100 points. But I like it to continue. We got to take, again, daily chart. We got to break this range of this Thursday candlestick to the upside. Now, again, it might not do it. It might chop around a little bit and find this legs within this level of this candlestick. So just make sure you have this candlestick's price marked on your chart. That's it. And take it easy, day at a time. Next one is Pinterest. Looking at Pinterest on a weekly, we did get a continuation move. So what I was looking for last week was a bounce into the 20-day. It gave us more than that. It went right through the 20-day and into the 200-day, right? Like I was looking for the trade along this line, but it just completely went into it. Went straight for the 200, rejected and formed the inside bar. So I think that this is just a great spot, great risk reward for Pinterest. It would be very interesting if Pinterest announced some sort of AI product as well, or some sort of AI integration for their service, right? Pinterest, if you know or don't know, Pinterest has an ads-based service where they run ads. You can run ads on Pinterest. So that's where they get a majority of their money. Inside bar, break above the high, test this high. 200 days is going to be a very tough level to break. As you can see, it rejected it pretty much on this day. Break below this level, we got the previous day's low. And then there's a potential pivot machine gun to the downside, which means we'll just take out every single low, back to back to back lows. What this means is there could be one candlestick, maybe like this one, right, that just breaks all this down. But again, I'm not in the business of selling delusion. So, but these are your targets if it does start to make a downside move. And then if it does have strength and breaks out above that 200-day moving average, then we do have, And we tested it. I mean, we tested the high of the gap there. We have the 50-day here, which is going to be the first target. Here, 100-day I would just totally ignore. Final target would be where this 26.61 is, and I would just go ahead and set a level at $26. Those will be your upside targets for Pinterest. And let me go ahead and actually run a fib and see how it lines up with those levels. Yeah, the Fibonacci projection brings you into the gap, right? It fills the gap, so very interesting spot. Forgive all the noise, guys. Give me 1 second. You guys are in the trenches with me. Brooklyn, New York. You know, YouTube is the YouTube crowd can't hear all that because I got some filters, but anybody who's on the live call with me, we in the trenches. We in this together. All right, so I like Pinterest. I want to see a retest that 200-day. I'm favoring it to the upside. I really, you know, some of these are just, this is just like, this will not happen. I mean, and if it does, then Pinterest deserves to be down there if it does fall all the way down to some of these levels, right? I'll leave this one because it's above the 20-day moving average. I'm gonna go ahead and redraw that Fibonacci because Fibonacci's make us money. I didn't draw that from the whole move. Let's see. There. So that's Pinterest. I just look for continuation. I think that this was just you know, not much going on there on this day. Next one is RCL. RCL on the weekly did nothing for us. So that one was a failure as part of the watch list. There is a beautiful cup and handle, right? Here's your cup, and then here's your handle. Breakout move. 3-bar play on the weekly. Nice little consolidation here, you know, but there's a bunch of sellers sitting here. We'll see what happens. I mean, I you know, I don't love playing this industry only because this thing costs what, $84. I mean, it's pricey, so it's not bad. But they don't make large moves. Like, this is a pretty big move. This thing doesn't, it's not like you can't count on it to make $10 moves like that. So whatever, I'm not mad at it. But higher lows still intact, higher highs still intact. So let's see what it does. You know, above the high, we can go ahead and retest the resistance at 83.13, and then there's a little bit of a supply here, so I expect it to chop around on that level. Maybe it'll give us a nice downside play. I'll revisit it if setup presents itself. Starbucks did exactly what I thought it was going to do. Break down below that 100-day and that 50-day, target straight to that 200-day. Exactly what I thought it was going to do. You know, nasty red candle here, nice gap down, continuation move all the way into the 200-day. So now that it's here, let's see. I like Starbucks. Starbucks is, I think, under $100. Starbucks is a steal. So if you're interested in owning it in your long-term portfolio, go ahead and start scooping some shares up now. You know, if you want to buy $1,000 worth and buy 5 here, 5 there, you know, buy 5 at 98, buy 5 at 96, buy 5 at 93, buy 5 at 100, buy 5 at 102, etc. Average into it. But what I want to see is, I want to see sellers take control and bring it underneath that 200-day moving average and test that 95 level, 95.31 level. You know, and then below that, there's some gaps. There's a nice little gap, like a 90-cent gap or 60-cent gap down into previous candle where there's a bunch of resistance, some chop, and then underneath that there's a nice little gap from 89 all the way down to 84. I don't see that happening, but you know, that'll be the next target we'll reevaluate as we get closer to it. Let's see. And then break above high of day, we can start to target some of these highs. We got a nice little gap to 102. The $100 level will be the main target to break and hold for a bullish move. Next one is Tesla, you know, nice break above the 50-day moving average, pull back, tested it, bounce, headed towards the 200-day moving average. I want to see a break above the 200-day before we can do anything with it. And I think that now that Elon has his focus back on Tesla, as I think his CEO for Twitter starts this week or next week, I think that, the announcement of her actual start date is going to be a strong move for Tesla. So we'll watch it. We'll see what happens. I would take it into the 200-day and above. If it rejects, I would play it back to the 50, right? So that'll be the play for Tesla. It's pinched between the two moving averages, and that's where it's going to land. So we'll see what happens. TSM, another one that we've been pounding on the table on for a little while. Nice inverse head and shoulders on a weekly. Consolidated on the 200, gave us that nice move 2 weeks ago and a continuation move last week based on NVIDIA. So I want to see some more strength in it, right? Let's see what you got. You've been consolidated for so long. Let's see what else you got, right? So these are your targets. Let me go ahead and set one in the middle between those two. There's a nice gap there, right there. Right, it's above that $100 mark. So as long as it stays above $100, it can, and it holds this gap, and it shows some strength compared to NVIDIA and some of the other names. But I want to see it hold this area here, definitely hold this gap, and then continue to move to the upside. If it breaks down below the low of day, then we could play the previous low of day, and this is not going to be a fluke breakdown, guys. This is going to be like, there's a reason for this industry, for semiconductor manufacturing, for microchips, for robotics, for automation, for AI, for all that stuff to kind of break down all together, right? And that's like if NVIDIA comes out and says, oh, my bad, we messed up on the report, or some crazy shit, right? So I don't see that happening. I do not see that happening. So let's look for a continuation to the upside. Keep it simple. Next one is Twilio. Twilio gave us, let's do the weekly real quick. Yeah, I mean, Twilio gave us a nice move to the upside. It gave us the bounce that we wanted, based off of all the supply all the demand that's sitting here at this level, all the support that's sitting here at this level. It gave us the same thing, right? We had that green candle from 2 weeks ago. It broke through the 20-day into the, I think I was hoping for like the 50-day test, but it went straight to the 100-day, 200-day. And then reversed hard on it and then retested it on Friday. Now, this is a very, very nice setup for us to take to the upside. There's very, very good risk reward to the upside on this. I'm going to end up going over this call a little bit, guys, so just bear with me. Because there's some names that I want to go over. Now, with Twilio, I'll probably play to the $70 mark. Nice even number. And then I would also probably give it more than a week. I'll call weeklies on it, but if you like it and you want to see the full move materialize, then look into next week or the week after. Maybe the OPEX week, 70 calls. And it all depends on what happens with this 20-day move, this 200-day moving average. Now, this particular move here, where you enter, let's say you enter at the break of high of day, and you say you stop at the close of day, you have a nice 5-to-1 risk reward ratio. And then there's also a very good downside play on this, right? Where you just take it below the low of day. You could say you stop at the high, or the open rather, or the close rather, and then you take it into the 50-day. I mean, it's gonna be like a 1-to-1, or what is it? Yeah, like one and change. It's nothing crazy, but it's still better than 1-to-1. Below that, into the 20-day will give you a 5-to-1, so not bad. I do favor to the upside, especially since they're all, Twilio, Zscaler, Datadog, CrowdStrike. They're all servicing tech companies, right? Servicing companies that have CRM, servicing companies that have security, servicing companies that have data storage, servicing companies that have customers, right? Like enterprise customers. So I see more upside to this. I want to see it break above high day. I want to see it take out this high, and then I want to see it try to test that pivot there at 66. 70 is gonna be ultimate target for Twilio. I think this is the new list. Yeah, this is the new list. So before I get into the new list, let's look at Lulu. For Jen's favorite, I think this is her favorite ticker. Lulu's breaking down very, very hard into this gap. I think there's just, obviously there's a big fair value gap here where price, right there, where price, between this candlestick, it just unfair, right? And so it held the gap over here, it bounced. No conviction, like it wasn't, the angle of attack wasn't as sharp and strong as this. It was very slow, very kind of mild. The pullback was much more, had a sharper angle. And then this last couple of weeks, very, very strong pullback. Broke right through the 50. So I would think this is probably going to target the 200-day based on the way that it's trading. So I would set the 330 as the 330.93 as the level where I expect it to bounce. I'm gonna draw also a fib level on the high and on this low here. And so we have a Fibonacci, 50% of the move is 337. So if it does break into 337, it doesn't hold, it's gonna fall pretty hard. It might break right through that 200-day moving average. So those are the levels that I expect for it. Jen, I know you're probably a shareholder in this company, and I wish that I was saying something different. I wish that this thing was hitting 500 tomorrow, but for now it looks like it wants to pull back a little bit and undo some of that nice strong move and fill a couple gaps. I mean, it's filled this gap, it's filled this gap, right? It's filling this gap, and that's good. If you're in this for the long run, you want to see it kind of consolidating. You want to see it building that pressure so it can break out and continue to move in one direction, right? Let's look at this on a weekly. I mean, this thing has been going sideways for like 2 years now, right? December 2022 is right here, right? So ever since it made this big move, consolidation, big move, and it's just well within that range. This is the range I'm talking about. The high here, low here. Actually, what I'm going to do is I'm going to draw another fib level on a macro. Let's get rid of that one. Fib. And, you know, it hasn't come back to retest this low yet. It's bounced a bunch on the 382 fib. It's consolidated a bunch of the 50% fib. And now it's, you know, if it double topped here at this level, it triple topped at this level. This is actually a very key level where it found hard resistance, right? Bunch of resistance at that level here. You see here in indecision, some support here. Big, strong level, strong move down, strong move down, strong move down. So, you know, on a macro sense, it's kind of expected. I think that the 200-day might act as some level of support. And then below that, the 50% fib from this massive move. Earnings on Thursday, so, you know, who knows how they're going to report. I mean, I saw one of my friends who said she just became a Lulu girl, which means, and she's like, I just became a Lulu girl and I'm now broke, right? So Lululemon products are expensive and they're very good products. They last a long time. I think they have a lifetime warranty on their products as well. So hopefully people are spending money in the gym and, you know, and then we get another earnings result such as this where it gaps up and it makes a nice surprise beat on both ends and continues to move to the upside. But keep this fib, Jen, if you like it, draw this fib from the top, very, very top. Of this move here, the top is 485.83 and the bottom is, I think, COVID low, 128.85. Draw that fib and play those levels. Those are your levels for Lulu. Crocs looks like it's bouncing off the 200-day moving average. They had a nice earnings beat, but not a great reaction to earnings, probably because they didn't guide very well. So guidance brought it back down. Nice little bull flag to the downside, continuation, some indecision here, some buying pressure here. We have an inside day on Crocs on Friday, which means that we are trading within the range of the previous day, not above and not below it. The 200-day is acting as support. Good support as we got a nice little bounce there. Break out above the high of this Thursday candlestick. We can retest this Tuesday, Monday, Friday candlestick, and then we have this candle where the 20-day will meet it, and then we have a little bit of a gap to the upside. So there could be a nice pivot machine gun to the upside on this based on what I'm seeing, especially with that 200-day sitting right there. Let's see if there's any news as a catalyst. Nothing directly for Crocs, right? But if other retailers show strength, Crocs will show strength. I think if Five Below shows strength, I think Crocs will show strength. So pay attention to it on that 20-day. Pay attention to it above the break of the Thursday high. Pay attention below the 20-day. Pay attention below the break of Thursday's low. Break of Thursday's low, I think probably won't happen. And if it does, we do have a bunch of support sitting over here in this gray box. So and we have the $100 mark right there, which, you know, stocks don't like to be, they like to be on one side or the other. They don't go from one side to the other. So, and if they do, then they're probably gonna stay there for a while. So I doubt that it will break down. Even if it does, I doubt it will break down really far, but we'll see. Let's go into this week's. So this week, obviously all of these green ones I'm going to keep on because I'm expecting either continuation or something coming out of them. This week, these are very noteworthy. Maybe no action on them yet. Maybe something to look at for the next couple of weeks, right? But AKAM, I called out something on this and it didn't make the move just quite, right? I think it was like a couple weeks ago. It might have been on this week. It didn't give us the breakout that we expected, but now it's well above the 200-day moving average on the weekly, forming a nice strength on the weekly. Looking at the daily, it gave us a nice little gap up on earnings. Yeah, I think it was this day. I think it was like here or something, like this week. And I was expecting it to break the 100 and go into that 200 and fill this gap. But it gave us this. It gave us nasty downside, which would have been nice, nice for bears or whatever. But I was married to the upside move. So anyway, we got a nice gappy move into the 200-day moving average, some consolidation inside bar here, right? Inside bar, another double inside bar, triple inside bar, all these bars inside of this candlestick. Finally got the breakout, came back, retested it as retested resistance as support, continued, retested that support once more. Now with Nvidia, now with TSM, now with MU, another name that's heavily integrated into the sector, AKAM. So I want to see AKAM for a continuation move. Let's take out this pivot right here. Let's take out this pivot right here. Let's take out this pivot right here. And then above that, we got the $100 mark. So those are gonna be my levels for the upside. If we undo the lows of Thursday and Friday, we got the low of Wednesday, and then we got the 200-day. Very simple, very nice, easy play. You don't got to think about it much. I believe these are not super expensive, so you can buy some time on these, especially if you see a pullback and then some buyers, buy it up, no problem, right? Next one is Boeing. I just like Boeing. I'm loving the fact that, I mean, this is nothing new for Boeing. Let's let this cop pass. Nothing new for Boeing. You know, Boeing likes to trade in channels. It does a channel for a while and then it breaks up or down out of it, right? If you've been trading Boeing, then you know that it just always does the same thing. It does channel for a while, then it breaks down. This one gave you a double bottom, nice move, channel, right? So if I scroll into the past, you'll see a bunch of channels as well. The channel over here, you know, channel over here, right? It just always does the same thing. So, but what I like about it is right now we kind of have this. There's kind of a cup situation forming from the COVID low to now with a nice little handle. We also have this double bottom with a nice strong move. This could also be considered like a kind of a bull flag, although the flag it's a very, very long, heavy flag. But what I love about it is that price is not at the bottom of the channel, it's towards the top of the channel. A lot of consolidation of moving averages, which means that they have to separate at some point, which means there's going to be a big move happening. And based on what I see, I think it's going to be to the upside, but I'm not 100% sure. Looking at this on the daily gives you a little bit more perspective because, you know, price is not as tight as you think it is. You know, the high of this candlestick here is 221.33. The low of this candlestick here is 202. So nice $20 range, so upside and downside. If you like Boeing, I would defer to S, the Snowman. He's very good at Boeing, and he has some levels from like 1965 or whenever the hell he started charting this thing. But I like this. I like these bounces. I like this move. Higher lows forming on the daily. I want to see it break above that 50-day, break above that 100-day. I honestly won't take it until it probably gets above this pivot here. I'll take it into this pivot. I'll take it into this gap. I'll take it into this pivot. And then rejection, you can just play the lows. Play the lows back right back into the bottom of this channel. Next one is Baidu. The reason why I like Baidu, was it the weekly that caught my eye? No, it was the daily. The daily. So we had this kind of double bottom that settled down over here, right? Double bottom-ish. Consolidation, bounce, retest, and then broke above that 200-day moving average. That's it. That's the reason I like it. It's above the 200-day moving average. And so maybe it wants to try to test that 50-day. That's it. Nothing too crazy, right? Break down below, you got a nice little put play to the downside, back into the support. But I like it better to the upside. Costco. Let's look at the weekly real quick for perspective, just so that everybody's on the same page, so that we're all on the same page. This wedge has been forming on Costco for quite some time, right? And so now price at some point has to make a move out of this wedge. Now, looking at that nice strong move on Friday, that looks great and all, but we're still just at the top of the wedge. I mean, there's nothing really much happening here. Now, if you catch it on this day, if you caught Costco on that day, then you made a lot of money. Costco pays very, very well. The low was $4.84, the high was $5.10, so that's a nice $26 move or so, 25 and change. Very, very nice move on Costco, especially on a Friday. You probably got contracts for $100 and it probably hit $1,000, right? Very nice trade. Now you see all the consolidation on these moving averages. The 20 was even just wrapping around the 200 a bunch. They're all consolidated now. So there's going to be, again, nice consolidation, nice confluence of all these moving averages. At some point, they have to separate. Right, they don't like to be around each other. They like to be separate. They like to have gaps in between them. Right now, there's nothing that's really keeping them apart. So we want to see a continuation move to the upside or a continuation move to the downside. Right, rather a continuation move to the upside or a break to the downside. Now, I do like it to the upside better just because I have some clear targets to the upside. Costco investors have no reason not to want to bring price higher, especially since price has been as high as. What is this? $612, I think it was. Go back to it. $612, right? And we're at $500 right now, 507. So nice clean move to the upside. Well, with a catalyst, right? Where's the catalyst? I mean, we had negative earnings on Thursday, right? Bad earnings, and look at what price did. I mean, I guess they guided really well, but bad earnings and price went up. So let's look for a continuation move to the upside. Good reaction. For Costco. And if we break down below, you know, we don't take out this falling resistance line here, then maybe we'll fall back and have the 200-day catch us as support. If not the 200-day, maybe the 100-day, maybe the 50, maybe the 20. There's so many moving averages sitting there that might act as support for us. So let's be patient and let's wait for Costco to break this 511.69. I'm gonna go ahead and set my alert. I'll set it at 511.75 to get a nice move to the upside. Next one's DoorDash. DoorDash is just giving us higher lows on the daily and back at a key area where a bunch of, you know, and even if you look over to the left, previous support, here, bunch of sellers, here, bunch of sellers, here, strength, indecision, bunch of sellers, so now we're back. What's going to happen? Do we go up? Do we go down, right? If it does what history said it's going to do, then it's going to reject and it's going to fall down and maybe take out some of these lows, maybe target this 50-day moving average. If we break above and buyers take force, then we have one pivot there, we have one pivot there, we have one pivot there, and we have a gap right here. So either way, very nice move to come out of DoorDash. Was it? It wasn't Door. It was Uber. Uber is the one that just recently announced autonomous vehicle partnership, so it wasn't DoorDash. It's something. DoorDash has some news recently, actually. Let me see what it is. Let me see if it's here. DoorDash Uber set to benefit from expanding global restaurant delivery business. Okay, Morgan Stanley bullish. DoorDash facing lawsuit allegedly charging iPhone users more than Android users. That's hilarious. And actually, that's not a function of DoorDash. That's a function of the App Store, the Apple App Store. By the way, 30% upcharge on everything through the App Store. So just know that. If you want to buy something and you don't mind using, especially like food stuff, go get an Android phone and go order that shit with Android, yo. You save a little bit, save a little bit of money. Actually, our Gold Rush in server membership, if you buy it from inside the server, it's, you know, on a PC it's $75. On an Android it's $75. Within an Apple iPhone, the same exact membership is $100 because Apple wants 30% off top. So that has nothing to do with DoorDash, everything to do with the App Store, FYI. So I don't think that's going to materialize for them in terms of bad news, right? But you know, if we do get back to this level at 69 and change, we can form a nice strong double top, push price back down. Or if not, if we have this kind of bull flag forming with a nice continuation move, then we can target that 73, then we can get to 75. But either way, I think there's a nice move in it. What else? Oh, Dropbox. Yeah, this was lovely. Look at the weekly. Broke through the 200-day moving average, and then kind of retested the 200-day support. Let's go back to the daily. Kind of came back and retested the 200-day support. What I love is that we have some volume price gap here. You see, like, sellers just took this absolutely insane move down. So if we can get back into this area, we can take this very, very easily back up to around the $24 mark. So nice $1.20 move back to the upside. For Dropbox, you could buy some contracts out in the middle of June and swing them, and they'll be nice and inexpensive, and they will return you some nice profit. You see a nice little double bottom with a higher low, back into the 200-day, broke it, retested it, came back, retested once more. Let me draw a fib real quick. I bet you that's a 786 fib on that 200. Yeah. A nice bounce, pull back to 786. Again, pull back to 786. 786 and 618, these two Fibonacci levels, this one and this one, usually whenever you see a pullback to it twice, where buyers stepping in the second time, it's going to rip. So let's target 24 for the first one. Let's target 25 for the next one. For Dropbox. DKS broke down below. This is my last one, I think. Let's see. Docu might be the last one. Let's see. Docu, GME. Oh, look at that, GME. All right. A few more. So DKS fell below the 100-day. It was holding on this day, fell hard off earnings. Oh no, earnings was the next couple of days. So it just fell hard. And then is now holding on to that 200-day for dear life. It formed a bullish engulfing on Friday, which took out the lows and the highs of the previous day and formed a green candle. Price went up. So I want to see price continue to go up. Right? That's all I want to see. I want to see price to continue to go up. If it can't go up, it's going to go down, right? It might go sideways, but if it can't go up, it's going to go down. Now, if it goes down, I want to see it come back to this level. I want to see it come back to this level. I want to see it come back to this level, right? So I just think it's a very clearly defined trade. I like that it's trying to overtake the 200-day, so I like it for continuation to the upside. There's a nice little gap here above $130.39. Either way, I think there's a nice setup, up or down off that 200-day moving average. Next one is DocuSign. DocuSign is cup and handling on the 200-day moving average. Its sellers are stepping in. I think that once buyers take control, this can get a nice little pop above that 100-day, above this high here. Let me go ahead and actually. This 200-day is a menace on this chart. But nice little cup and handle forming here. We want to see it break above 5-day, obviously break above that 100-day, test this level, and then we got a gap, right? Got a nice little gap. Those are the upside moves. Downside, I mean, we have the 50 days acting as support here for 3 days in a row, so I don't think it's going to break down below that. If it does, breaks down below the 50-day, take the low of day as the entry. Low of day as entry. And you could trade it down to the 20-day. I personally will probably just not take the downside trade on this. I'd probably just let it give you a better price to the upside, right? Some trades set up nicely, both sides, some don't. I think that, and it's not bad. It's not a bad risk reward to the downside. I just don't want to trade this to the downside. I'd rather trade it to the upside. For Docu, GameStop. 200-day interaction, big red candle. 200-day interaction after gap up, big red candle. Nice strong move after consolidation and trend. Pulling back. Couple of candlesticks all within the range of this candle. I think that is that an inside bar that formed on Friday? Let's see. Let me zoom into it. No, it's not, but oh god, here we go. It isn't, but it's pretty close. It's pretty close, right? Price did break above the high of Thursday's candlestick, but the 200-day rejected it. So I just want to see it break above these highs, right? I want to see it basically go back to that level and go back to, let's see, 25.50 is probably a good spot, right? I just don't know. My thing with GameStop though is I just don't know, like, if it has obviously big candlestick here with the range of from $22 to $24.36, so $2.50. Good range, especially if you're trading options. I don't know how inflated these premiums are anymore. I just don't know, but I see the setup. I think it's nice. If you like it, and you have traded GameStop recently, then talk to me about it, right? Let's talk about it. The last time I traded it was like on a Friday. I didn't love it. It didn't really make us money. It went sideways. The rest of the market went sideways. Maybe there's a better opportunity incoming, right? Last one is, or second to last one is Google. Google's at a key level. good consolidation for the past week. Previous support, right, and now it's acting as resistance. The weekly is, I think, where it's at. Yeah. Even if you look over to the left, you know, you have some indecision at this area. You have some buyers stepping in at this area. Buyers, sellers, right? So we want to see it break above the high of the week. Google's obviously also an AI play, and I think their investor day was a big catalyst for the move. I think positive earnings was a big catalyst for the move. Who was it? Who was it? Was it Bill Gates? One of these bozos. They were like, oh, you know, with the advent of all this AI technology, how quickly it's moving, you got to be careful. Like Google and who was the other company? Some other company, maybe Microsoft, maybe it's Bing, I don't know. But the search engine industry is like gonna die with AI. And I think the opposite. I think is gonna, and obviously they know much more than I do, and they're much more clued in than I am. But you know, Google search using AI, I think is much stronger. Google sells a lot of ads on their search, which is, I think, a major segment of their business. So maybe that's something that they're gonna have to adapt. And Google also owns YouTube, which pays out revenue for ads and views and all that stuff. So it's going to be interesting. But I think Google, you know, they're in hardware. They're everywhere. I think they're just not in like metaverse yet, or maybe they are and just not talking about it, but they're everywhere. So I don't think that, and maybe the search is a major part of their business, a major segment. I believe it is, because that's how they got their start. Also, it's very low cost for them. But you know, we'll see how I'm not in their business, so I don't know. I want to see a continuation move. I want to see a break above the high of week, test that 127, 131, 134. And if we can break above that and we reject and we pull back on a weekly, I want to see maybe take the break of the open down to the low, down to previous low, down to previous resistance, right, for Google. Looking at the daily, just clear levels, nothing crazy, right? Clear levels. I want to see it go up, but if it does pull back, I'm gonna load into some shares. And if you look at Google here, let me just draw my line there real quick. I'll get rid of it after. Google has that higher lows into resistance, right? Triple tap breakout move that a lot of these other names are showing. So that's another reason why I want to always keep Google. You know, if Google's ripping, then some of these names might rip. If Google pulls back, then after these other names rip, they might pull back. Like, it's like you can kind of see the future with some of these, right? So interesting. LI, probably won't trade it. I just like the fact that it broke out above all these moving averages that were all consolidated, right? All consolidated over here. Now it's starting to spread apart, all giving you bullish crosses through that 200-day moving average. And that was kind of bull flagging. Maybe that 20-day catches up to it and it bounces off of that, right? So who knows? Let's see. That was it. Let's look at ES futures real quick. Anyone have any requests that you want to look at? Go ahead and drop it in trade floor now. And let's look at the 1 hour. Yeah, so this is the gap up through, this is Friday's close. And this is Sunday, last night's open. We kind of gapped up, pulled back. Looks like we filled the gap. Let me just zoom in on it a little bit. Looks like we filled the gap. It looks like it wants to fall, but I don't know. All right. And let's see. Low 42.20. 42.20, so double on the same low. High 42. Okay, so the gap has been filled. The gap has been filled. Not too much price sitting in this area. Maybe there's some price action from before sitting in this. Look at it before. The last time we were here, we rejected it. Now we're testing at a support, right? So if we continue to test this level of support moving forward, then we might get a continuation move to the upside based on where it's at now. Let me go ahead and draw a line there, right? There's better, right? So we'll see what happens. This is just a key area. You see all the price, how it kind of reacts in this area. So let's see if we got a reaction to the upside or downside. Snow because of CRM earnings. Let's go to the daily. Snow formed an inside bar. Snow looks like the exact opposite of NVIDIA. But it formed the inside bar on Thursday's price rather. Breakout above the high of day. We got that 200-day sitting right there. It's going to be crucial for Snow to break above that 200-day moving average. It did not spend too much time above it. It needs to get back above it if it wants to show strength. And the 200 days flat. All these other moving averages are right on top of each other. So good chance for separation here. Didn't quite take it. Lots of support sitting in this area. Let me actually change this over to the volume study. You can see what volume looks like on this. Lots of volume sitting in this area. So price can really get held up in this area as long as, buyers still like it in this area. Above the high, we got this little shelf right here. Above that, we got the high of previous day. Then we got all this big gap. Look at all this gap, all this blue. It's not extended as much as this is, right? So price can quickly move to this level. If we're looking at it for CRM earnings, really it's going to just be, look for a good premium. First of all, develop what you think is going to happen with CRM. I would also look at the flow channels, the sweep channels, golden sweeps, and dark pool, and look for CRM in the past month. I would also look at CRM. Look at where all the volume is, where the calls are puts, and all the open interest where the calls are puts. Look at it for this week. Look at it for 6/19, I think is a Friday expiration. Look at it for July, and look at it for September. Look for those big monthly expirations and see where all the volume is. If the volume is even on this week's and even on 6/19, but it's strongly bullish in July and strongly bullish in September, big money's not playing weeklies. Big money's buying leaps that are like at the money, and they're gonna make a lot of money on it still, right? So they just need 10% on their $1 billion, right? You and I are looking for 30, 40, 50%. They need 5% on their $1 billion. They're happy. So look out into the future and see kind of what CRM is telling you out in the future chains, and then maybe we could play Snow into the same direction. Now they are peers. I'm not sure if they're in direct competition or if they're complementary. I'm not sure how if their businesses are adjacent to one another, or if they're in the exact same, fighting for the same food, right? I don't know. But that's a little bit of research that you want to do there in regards to that. Now, if you are on YouTube and you're joining us now, again, I just want to talk about our small account challenge. I'm very excited for this. Anybody who has been with us during our previous small account challenges know what kind of expectation there is coming out of this challenge. I like to call it the discipline challenge because it's very tough to see a move materializing. And shout out Benson once more, Benson investor who his first day with us on Friday, he took a couple of trades for 30%. And he said, you know what, I'm happy. I'm going to take that profit off the table, put it in my pocket. You can never go broke taking profits, right? And I mean, obviously some of those moves materialized much more quickly than we expected, but 30%, we can get them almost, like clockwork. So, and it's hard to take off 20%, 30% when the move hasn't even started. But I like to peel almost all of my profits off at 20, 30% because who knows what's going to happen. So very excited for this challenge. This challenge will reframe our mind to taking profits very quickly, building our accounts by way of compounding gains. And if you're interested in the details of that, they'll be in the description of this YouTube video. If you're in the server, then I'm going to drop details once more. They're in the headquarters channel. I think I'm gonna make a small account challenge channel so that we can talk about the challenge, maybe any questions that we have. I'm also malleable, so if you guys want to flex the rules a little bit, that's cool. But very, very excited for this challenge starting next Monday. So that's it for me, guys. Thank you so much for being on the call with us tonight. Thank you for your participation as always. And let's get ready to print some money this week. Maybe you can use the money that you make this week to fund the small account challenge starting next week. All right. Thank you, guys. Have a good night, and we'll see you in the morning. Peace.